Are you wondering how to perfectly time the top of Bitcoin's current bull market? Are you lost in an endless sea of technical analysis, on-chain data, influencer sentiment, and financial astrology, praying that when the stars finally align and the bull market reaches its climax, your system will spot it and perfectly time the sell signal? If so, you're attempting a nearly impossible task. Very few, if any, will be able to perfectly identify and sell the top of this cycle. But that's okay, because today I'm going to let you in on a little secret. Timing the top for max profit isn't about looking at on-chain metrics or technical analysis. In truth, it's not even about selling your Bitcoin. Maximizing profits near the top is all about knowing how to cheaply hedge yourself at the right moment. And the best part is, with the strategy I'll be teaching you today, you can find ways to get the market to pay you to hedge. That's right. But in order to execute this strategy, you'll need three things. 1. The ability to identify the signals that the market is topping. 2. Know how to structure your options trade. And 3. Of course, have an options trading account, which if you don't have one already, follow the link in this description to begin trading on CoinCall today. Now, before we get into today's lesson, allow me to introduce myself, and thank you for tuning in. For those of you I haven't met yet, my name is JJ, Senior Options Analyst at JLabs Digital, and today we'll be analyzing the orange to red phase on our options trading rainbow regime chart, and breaking down how to trade it for maximum profits in 2024. Now, what this orange to red phase signifies is that the bull market is entering into its 9th and final inning, the home stretch, when it's time to begin hedging ourselves aggressively. Now, if this is your first time tuning into our options videos, be sure to follow the link below to catch up on all of our previous videos, which explain this chart and how we use it to trade options in more detail. But for now, let's proceed to the lesson, and start with all of the important top signals that will be appearing during this phase, what everyone is looking for, and what you actually need to study if you want to properly time the top of this current Bitcoin bull market. First up is price, which is the most obvious signal. So let's discuss what that would look like if we reach this orange to red phase in 2024. As we see here on the chart, that would be a price of any number above 220,000 within the next year. Sounds crazy, right? But past cycles show us these gains are far from impossible. Look at the math. 220,000 is just a 3x and change increase from the 2021 cycle's high of 69,000. In 2021, Bitcoin topped at 69,000, which is well over a 3x increase of the 2017 cycle's all-time high, around 19,000. And in 2017, price nearly 20x'd off the 2014 cycle's all-time high. Cycles previous to that boasted even larger returns. So when we consider these post-halving percentage gains and the potential impact of institutional adoption can have on our current cycle, a $220,000 price target may seem extreme, but it's certainly not impossible. Now, while most novice traders will spend 24 hours a day studying the TA and charts to try and find the divine moment when the market is peaking around this price, you want to look at a more reliable signal. The this time is different signal. And you can rely on this signal because as humans, we can't help ourselves. Every time there's a bubble, people start believing this time is different. So think of the pandemonium and uproar that will overtake the market if we reach these levels. Hyper-Bitcoinization talk will be everywhere. People will be posting targets of 1 million plus per BTC. And the initial euphoria you felt as Bitcoin first crossed 100K will turn into a full-on out-of-body experience as you watch price move higher and higher each day. That's when you know we're near the peak, when that madness begins to take hold. That's when I want you to remember this video and refer back to our rainbow chart, as this extremity of sentiment will be the clues we look for to understand that it's time to start hedging aggressively. Which brings me to the secret of this strategy: hedging, not selling the peak. Because today's strategy isn't about moving in or out of the market through spot selling. No one can perfectly time the market, and selling takes our exposure off the table. And it can also be very expensive from a tax perspective. But hedging at the wrong time can be just as expensive as selling your spot. That's why you want to wait until you see these crucial signals. Then you use the euphoria of the market and a glitch in the options pricing mechanism to juice your profits and protect your gains, with the trade I'll be discussing in just a minute. So again, if you're new to this series or options in general, and the language I'm discussing now sounds a bit foreign, be sure to check out the link here to learn more about our options fundamentals. But let me explain the options pricing glitch that I hit on earlier. You see, options markets don't price themselves according to Bitcoin cycle theory or poor supply and demand dynamics. They price themselves only based upon the momentum of the current moment. This means that if Bitcoin goes up over 3x over the next year, Bitcoin call contracts will likely be priced as if an additional 3x over the ensuing year is possible. This is your alpha. That means that if Bitcoin gets above 200k, long-dated out-of-the-money calls say at 500,000 and above that don't expire for an additional year, will be carrying steep premiums. And you can sell these contracts against your spot Bitcoin holdings, then use the premiums you collected to buy yourself crash insurance. The premise here is simple. When the market starts believing higher forever, the options market begins pricing in higher forever. And that's when you take action. So now you know what the market will look like from a price and social signal perspective. Let's break down the actual trade. I like to call this trade the OPM trade, or other people's money, because I'm using the market's money to purchase my exit strategy. It's made up of two parts. I sell the market some risk, and then use the premiums collected to buy my insurance. Let's return to the pricing and the rainbow chart we discussed at the start of the video for context. Now imagine Bitcoin is trading at $220,000 by January 2025. You go to CoinCall and find a $500,000 call that doesn't expire until January of the following year. Odds are you'll be able to sell these contracts for anywhere from $10,000 to $50,000 and above a piece. Pretty juicy, right? Now your question probably is, what's the risk? Let's walk through two scenarios. One where Bitcoin's price goes up only, and two where it returns to Earth. In the up only scenario, where Bitcoin goes above the $500,000 strike you sold by January 2026, you're fully covered as your spot gains will offset any losses you incur from the derivative contracts. And the premium brings your average BTC cost down. While you did sell your spot holdings, you now have some cash to buy Bitcoin when eventually mean reverts lower. The risk here is low. You're essentially selling your potential upside above $500,000 tomorrow for liquid cash in your pocket today. And in the more likely Bitcoin returns to Earth scenario, well, if history repeats itself and Bitcoin instead reverses into another bear market by 2026, you get to keep 100% of that call premium sold. Additionally, because you use the premiums you collected from selling those long-dated calls to buy long-dated put options, you'll actually make money as price returns to the mean, and again, your risk is fully covered. And the most likely scenario is Bitcoin's price returns to Earth, which means hedging will become cheap. Very cheap. Here's why. Based on previous cycles, we know that once Bitcoin hits the orange phase, it typically has about 1 month until price corrects strongly to the downside to the tune of 30 to 50%. Now, one of the beautiful parts of Bitcoin options is the glitch, where they're priced on where price is currently, rather than where it is likely to go in the future. As a consequence of this, it means that when the market is expecting up only forever, like that which we'd experience if Bitcoin eclipses $200,000 within the next year, very few others will be looking to hedge, which means you can buy your put insurance for cheap, very cheap, just in time for the crash. Using the premium you collected to sell the deep out of the money calls against your spot Bitcoin holdings, you can then buy puts that expire in anywhere from 1 to 6 months, knowing that Bitcoin will likely mean revert. And the math works out well. Say you receive $20,000 of premium for selling that January 2026 500K call option. You can then use that premium collected to buy put options with strikes at or near the money of $200,000 and below that expire in 1 to 6 months. Now in the event of a crash, you'll not only get to keep all of the money you collected on the call premiums, but you'll also be fully covered against losses to the downside on your spot holdings thanks to the puts. And you might even end up in a net profit thanks to the insurance paying out on your put contracts. All without having to sell any of your precious spot BTC and incurring a hefty tax bill for recognizing the gains you made along the way. So now let's recap the play. 1. Look for signs that the market is convinced a new paradigm is here, and we're in up-only mode. 2. Sell out of the money calls that are a year or more out. 3. Use those premiums collected to buy at or near the money puts that expire in 1 to 6 months. Then watch peacefully as the rest of the market goes crazy, as the inevitable 30 to 50% drawdown plays out. Now you know what the signals will look like and how to execute this trade. But of course, none of this is possible unless you have an options trading account. So if you haven't already, create your CoinCall account today using the link in this video description, and start trading options now to get the hang of it before this trade presents itself. Also, check out the other videos in our library, which describe various other Bitcoin options trading strategies for other phases of the market. Just as a reminder, we're still in the green phase of our rainbow chart, so definitely check out that video when you have a chance. And as another reminder, follow along with us in our newsletter, on Twitter, using the links in the description, as well as our bi-weekly live streams on this channel, where we provide real-time updates on the options market and provide you with all the tooling you need to secure your fortune in this Bitcoin bull run. I look forward to seeing you there, as well as in our more interactive community trading rooms, which will be coming later this year. So until next time, trade safe, and thanks for tuning in.